I'm going to share with you some great news for Amazon stock investors in this video, as the company is making excellent progress where it counts most on its logistics and fulfillment expenses. These are the costs that are the highest cost for the company overall. It consists of the largest percentage of its overall cost structure, and it's making great improvements in this category. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so I have pulled up here Amazon's most recent 10Q statement, and this is page 29 in that statement. And you can get these documents from finchat.io. They aggregate a lot of this financial information from companies that I'm following, and there's a link in the description. So the good news here is what we're looking at is the percentage of net sales and the cost of sales for Amazon. And you can see the cost of sales is the largest component of the company's overall cost. And that number fell from 50.7% of costs down to 49.4% of cost year over year, meaning they made improvement in this category, making it consist a lower percentage of its overall cost structure. So the company talked about the cost of sales, and they said the increase in cost of sales in Q1 2025 compared to the prior year period, because the number overall was higher, but it was higher because it sold more things. But as a percentage, it was lower. So that increase was primarily due to increased product and shipping costs resulting from increased sales. But that was offset by fulfillment network efficiencies, including lower transportation costs. And that's where the good news comes in. Amazon has been making great progress in lowering the cost to serve customers, lowering the cost of each delivery. And the way they're doing that is several. First of all, they made a big change to where they host their inventory, the warehouses. They went to a more regional structure that puts more of their inventory closer to customers, especially the inventory that they have data on that they see customers buying most frequently. They place that inventory closer to customers, which makes it easier for Amazon to deliver, less distance to travel to customers, thereby lowering the cost of each delivery. Additionally, by having their inventory closer to customers, it increases the delivery speed, which increases sales because, as you might know, when you're shopping for product and you notice you can get that product really soon, it makes you more interested in buying that product. That's what many consumers do when they're shopping for product. If they get a faster delivery promise, it makes them more encouraged to purchase that product. So that change has had double positive impacts for Amazon. The other thing Amazon is benefiting from is densification. Amazon, because they're growing so large that there are many customers in the same area. And so when that truck goes to make a delivery, it's making a delivery to a couple of households in that neighborhood instead of just one household in that neighborhood. And so if you spread out the cost of that truck and that delivery person going out to that neighborhood, if it's only delivering to one household, the cost of that delivery is much higher than if it's delivering to 4 households, right? You take that total cost, let's say it's $100 for that truck and driver to go to that neighborhood. Well, if it's only delivering to one household, then the cost of that delivery is $100. But if you're going to that neighborhood and the cost of that delivery is $100, but you're going to 4 different households, now the cost of that delivery is $25 each household instead of $100 each household. And so in that way, that's what Amazon calls its densification. And that's really helping the company lower its cost to serve customers now that it's reached such a large scale. They go on to say that they seek to mitigate costs of shipping over time, in part through achieving higher sales volume, which I talked about here, right? Higher sales volume means more deliveries in the neighborhood, right? More people delivering, more households to deliver to. Also, more units inside the box. So if you're delivering a tube of toothpaste, that's likely going to be a money losing transaction for Amazon. It probably costs more to deliver that toothpaste than Amazon earns from selling that toothpaste if you're an Amazon Prime member and you get free delivery. But if you're ordering toothpaste, a 12-pack of Coca-Cola, maybe some t-shirts, maybe a pair of sandals, or whatever your basket of goods might be, the more things you order in that basket, the more profitable it is for Amazon. Optimizing their fulfillment network, that's what I talked about, the regionalization, having items closer to customers so that the distance traveled is lowered and thereby lower cost of shipping. And then negotiating better terms with suppliers. This is what Walmart is famous for. Walmart is probably the best in the world at negotiating terms with suppliers because Walmart's been doing this for decades. Walmart has relationships. Walmart has the expertise, the personnel with decades of experience in negotiating terms with suppliers. As you become a larger company that controls a larger percentage of consumer spending, you can go to suppliers and say, you got to give us this price for this thing. Otherwise, we're not going to carry your item on our website. And you can have better negotiating power because the supplier then has to make a difficult choice. If they don't give you the price that you want, they remove themselves from having access to the hundreds of millions of shoppers that spend money on Amazon's website. And lastly, they say they are achieving better operating efficiencies. And this comes with time and with attention and with management skill. Looking at your data, looking at your processes, and seeing how you can deliver better performance as you learn your business. And every business should be doing this. There's no excuse if your business is delivering the same quality of service and the same operating efficiency as you were 5 years ago. You should be getting better. And I talk about this when talking with my university students. And, I teach freshman classes and I teach graduate level classes. And I tell all the students when I'm giving this example about a business getting better, improving their margins, improving their efficiency, I tell them, you remember when you were a freshman and now you're a senior in college. You're probably better at studying, at learning, and your skills of taking classes and passing classes than you were as a freshman. And if that wasn't the case, you probably wouldn't be a senior now. You probably would still be taking freshman year, first year classes. And there's no excuse like for you to be the same level of student as you were in your freshman year in your senior year, right? And very few students are like that, right? Most students I notice huge improvements from freshman year to senior year in their ability to learn, in their ability to navigate courses in a university. And so a business is no different. You should be getting better at what you do. And Amazon has definitely gotten better at what it does. And this one area has been a big improvement for the company. The cost of sales improving. That's allowed its e-commerce business to drive billions of dollars of profitability in recent years. And that's been a risk reduction for investors because previously it was the company's AWS, the cloud services segment, that was driving such a large percentage of the company's overall profitability. Now, in recent years, the North America segment and the international e-commerce segment have grown to become a large part of a profit contributor for the business. And that's great news for Amazon stock investors. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.